Welcome back. Berkshire Hathaway's $6.8 billion acquisition of home building firm Taylor Morrison is officially closing this morning after agreeing to the all-cash deal in May. For more on that deal, plus a look at the broader housing market, we're joined now for a first on CNBC interview by Taylor Morrison CEO Sheryl Palmer. She will stay on as chief executive under Berkshire. Congratulations on the closing of the deal. What does it mean for you and the company?
Well, thank you for having us today. It's a very exciting day. I would say it's a transformational day for both Taylor Morrison, the Berkshire home building brands that operate today under Clayton, and our industry at large. So we are very delighted about the official closing this morning.
It happens, of course, against this backdrop where you see mortgage rates moving higher, you see some stickiness in terms of upward yields, over a longer period of time. How does that impact the business, if at all, at this point?
Well, I think, first of all, we get to focus on the long game because, as you know, this is a cyclical business that we operate in, but we are serving more customers in more markets, which will allow more choices for our customers, but still maintaining that very specialized local expertise that I think has made Taylor Morrison so successful, as well as Clayton Property Groups. So we're ecstatic to build on the scale of the combined home building platform. And yes, we're going, as we've seen over the last couple of years, we'll have some continued volatility, certainly as we've seen interest rates move over these last 2-3 weeks, unfortunately hitting highs for the year.
Are you expecting a big recovery in terms of U.S. housing demand?
I think there's a lot of conflicting data points. I think absolutely we have a baseline demand, and I think we've had people sitting on the sidelines for quite some time. I was very encouraged by this morning's sales numbers. I think they were a little higher than last month. That's not something you would typically see from just a normal seasonality standpoint, but I think it speaks to the desire and the need for today's housing. When you look, in the midterm, I'm very excited. When you look in the long term, I think you do have some demographic headwinds coming at us, but I think that's why with this new transaction and the ability to serve renters, first-time buyers, move up, second move up, and then our Esplanade brand with resort lifestyle, we'll be able to continue to serve the full spectrum of consumer segments, and I think that puts us in a very unique position.
Sheryl, your point about June, where you normally think that's pretty well into the selling season, having a decent month. Some are reading that as a sign that both buyers and sellers are sort of saying, you know what, we're not going to wait for rates to come back down. We're going to try to live our lives in this environment, if that's truly what this is.
Carl, I think there's a lot of truth to that. I think there has been no lack of desire and what I would say, customers around the hoop trying to understand. It's been a complex time trying to understand, are rates going to move down? Are they going to move up? And, every 30 days, wait, because the story changes. I think we've seen pricing settle across most parts of the U.S. I think we've seen many markets, I would say stabilize. And so I think the consumer is just ready. Life moves on, and I think they're ready. And now our ability to focus on the long game and acquire land in today's market at very disciplined prices and invest through these more unique times, I think provides a unique opportunity. And it's honestly that patient capital is one of the things that Berkshire provides that I am so excited about as we can 3, 5, 10 years out from today.